Buying online businesses and profitable websites is a billion-dollar industry that almost nobody is talking about. With all the talks about cryptocurrency, Amazon FBA, dropshipping, all these other ways to make money online, it's wild that nobody really has made an in-depth video about buying online businesses. And that's what I'm going to do today in this video. After personally helping buy and sell more than $120 million worth of online businesses and building one of the world's largest brokerages to buy and sell online businesses, as employee number 4 at Empire Flippers, I'm here to share everything I've learned along the way of brokering online businesses and what you can do and what you need to learn to understand the full process. So just a few things, guys. I've been there from every angle of the online buying process of buying online businesses. I've helped others do it and I've done it myself. And so again, I want to share all the things I've learned from being involved in this industry for, let's just say 7 or 8 years. I've even been contacted by the Rothschild family to actually do investment and acquisition advising for them. So when you're considering buying an online business, there's 3 important areas that you need to consider. And let's cover these and then we'll get into the actual buying online business process. So the first thing to consider with any investment is cash flow. And the reason that cash flow is king is because with most other investments, your money is going to be tied and it might not be super liquid. Whether you're buying stocks or real estate investments, the liquidity is something to consider, but more importantly, it's something to consider is the cash flow. How much money is actually being generated from your investment? For example, if you buy the S&P 500, yeah, the stock might be growing 10 to 15% per year, but you're not actually able to get and generate cash flow from that. But this is much different with an online business because every month you're going to be getting, let's say, $5,000 to $10,000 in profit that's paid out to you based on your investment. So the actual annual revenue or annual profit that you're taking out of the business is likely going to be much higher compared to other investment classes. The other big important thing to consider with buying online businesses is the product market fit. Nearly 95% of all online businesses fail that start from scratch. So what you get when you buy an online business is you're actually buying that 5% of businesses that have already become profitable, have product market fit, and have a much higher chance of longevity. Meaning those 95% of businesses that already failed, you don't have to worry about them. You're just focusing on the ones that got it right, got the systems right, and are already functioning, and you're able to take those businesses over. This essentially means that the risk of the business going to zero is a lot lower because the business is tried and proven. One of the most important things to consider when buying an online business is that they have untapped earning potential. Looking at other investment classes and other types of things that you can actually buy or invest in, usually they don't have an untapped earning potential. And let me explain. Many businesses on the market aren't operating at their full potential. Maybe the seller hasn't explored new marketing channels or optimized their product offerings. That's where you can come in and scale the business to new heights. With my personal acquisitions and with other buyers that I've helped along the way, it's not out of the range of reason to 2, 3, 4, or even in some cases 10x the business. With other investment opportunities, that's usually not the case. Whether you have an experience with buying online businesses, there's going to be a huge potential to get a better interest on your money, and also with the growth of the business, really outscale and outperform any other investment class out there. So now that you understand a few of the key areas of buying online businesses, let me walk you through the actual buying process and some important things to consider when you're going to and looking to buy an online business. So the first stage of buying an online business is going to be the research stage. This is generally the longest area, and this can take around 1 to 3 months. That's what I've seen for most people in my buyer acquisition program. But I've talked to some people who've been looking for businesses for 2 years, but they never had the confidence and systems to actually go through with it. They usually come to me, and since I have a proven system, I'm able to get them results in a business that they're more confident about, and it's going to be a lot lower risk than something if they were going to do on their own. But let me break down what things to actually consider when taking on the research and acquisition stage. The first thing you need to do is set a maximum liquidity budget, meaning how much is the maximum cash you want to actually put into the business. This can be from, you're going to sell off some stocks, bonds, and then also put some of your savings towards the business. Typically, let's just say setting a budget around the $200,000 range, meaning that you can look at businesses that are likely a little bit higher priced than that, and you can utilize other creative things like financing. The next thing is you need to actually identify your criteria. What type of business are you actually looking at? What is the niche that you want to buy a business? And what type of monetization method is the business made of? For example, there's software businesses versus drop shipping. And again, my big recommendation for almost everyone is to look at digital products and software because they're usually a lot lower risk and have a lot higher potential for growth. The next step is going to be browsing marketplaces and other brokerages like companies like Empire Flippers, where you can actually see these businesses and start performing due diligence on the deals. During the due diligence stage, this is the number one mistake I see people make when buying an online business is they don't have the right lens to actually look at an online business. Most people only focus on the financial due diligence of a business, but there's going to be a lot other areas to consider. For example, the search engine optimization, the backlink audits of the business, actually auditing the seller to make sure that it's a legitimate person who you can trust, and then a wide variety of other factors depending on what type of business. How is the quality of the product? Is there contractors that have ongoing agreements that are going to stay on after the acquisition? And there's a lot of other things that you need to look at outside of just the finances. Again, the financial aspect is extremely important, and you need to know what to look for in that as well, but there's a wide range of depth that needs to go into the actual due diligence before you acquire and buy an online business. And guys, if you learned something new there, you're gonna love this next part. I've partnered up with Amazon's Audible to give you a free copy of my #1 best-selling book, Global Career: How to Work Anywhere and Travel Forever. Global Career has been featured in prestigious publications like Forbes, CNBC, Entrepreneur Magazine, and even Lonely Planet. And with over 500 positive reviews, this book has helped hundreds of thousands earn from anywhere. To get your free copy and start a 30-day free trial of Audible, all you have to do is visit globalcareerbook.com/audio today, or just scan the QR code on the screen here. So once you've actually wrapped up this stage, you found a business you like, now you're going to actually go ahead and get on a call with the seller of the business and essentially learn a little bit more, and then move on to the next stage, which is the negotiation stage. When buying an online business, everything is negotiable. Again, this is one thing that most people don't understand. And the biggest mistake I see is they want to try to negotiate, send a lowball offer, but they don't have any rationale or reasoning to back that offer up. During the due diligence stage, I'm looking for areas to assess this business and come up with my own valuation backed by data and hard-coded knowledge of the industry. I think a business is worth X dollars isn't really the right technique. You need to add the why factor on, I think a business is worth this because of this, this, and this. Having this breakdown is going to give you a little bit more bargaining on why the business is actually worth that amount of money and why your offer is actually valued. It shows not only that you understand the marketplace, but you also put a little bit thought and effort into your due diligence process when coming up with a valuation for the business. There's a lot of other complexities that you also need to understand when negotiating a deal and getting a deal done. Again, buyers in my program, we've seen an average of $100,000 discount by using our third-party negotiation tactics. And a lot of this comes down to is one, being able to isolate and find sellers that are motivated for a quick exit. Not knowing how the industry works or knowing people inside and behind the scenes, you're not really going to be able to reveal this sort of information easily. So this is where I come in with my acquisition program. Whenever I'm going through a negotiation process, I usually have 5 or 6 different deal negotiation scenarios that I'm discussing and sending over the first one and then scaling up based on their feedback. Typically, when somebody declines an offer, you shouldn't just send them another offer. You should say, hey, I want to figure out what they liked about this offer and what they didn't like. Maybe it wasn't enough cash up front. Maybe the earnout or seller financing was too big. Maybe it was just too long, but the same amount was fine. For example, maybe they didn't want to wait 2 years to get the full earnout, but they're up to wait 6 months or 12 months, and that deal would still be something that they would accept. So you need to isolate which areas of the offer they like and don't like, and then you can utilize that to counter offer. So once a business has had a negotiation stage finished and the offer has been accepted, the next area and aspect of the buying process is going to be the migration and transition stage. This is one of the most important processes because, again, about 5% of businesses just can't easily be migrated over to a new buyer. And I'll talk you through a few of the reasons why. So usually the things that are actually being transferred over are going to be domain names, hosting accounts, customer lists, and supplier relationships and contracts. A few of the biggest issues I've seen with transferring and migrating a business have usually come down to the payment processors not actually transferring. This is going to be a big deal if you're, for example, have $10,000 or $20,000 in monthly recurring customers that can't be transferred over successfully. This could be the reason that a deal doesn't get done, but it is fairly rare, and I would say it's under 5% of probability because usually whenever a person is selling a business, they've already looked out for certain scenarios where this wouldn't be eligible. During this migration stage, it's extremely important to understand that what terms are actually going to allow you to continue through with the deal, or if things aren't migrated over successfully, how to back out. There's a few important factors that I always bake into an asset purchase agreement to protect the buyer, to make sure that when this stage is happening, that if something goes wrong, they're able to back out of the deal. Typically, this can be if revenue drops below a certain threshold or if certain things can't be migrated over to the new buyer. Now, the last stage is one of the most fun and ongoing stages. This can usually go from 6 to 12 months after post-acquisition. The first month is essentially just understanding the business, knowing how to operate it, getting SOPs and documentations on how every single area of the business works, because once that seller is gone, it's a lot harder to get them back on board without paying them or without having some sort of incentive. Typically, when you're buying a business, you're going to have a 30 to 60 day training period with the seller to make sure you understand everything moving forward. This is why I usually focus just on getting the business up and running and maintaining. After the maintenance mode is finished, let's say between 30 to 60 days, then we focus on actually growing and scaling the business to be more profitable and make more money. Now, there's a million different ways to grow a business, but there's a few hidden secret ways that I only reveal in my Buying Online Business Secrets ebook. So if you've liked what you've seen here, I've actually created a free ebook called the Buying Online Business Secrets. This resource goes even deeper into the strategies and has a few important things like a due diligence checklist included. You can head over to globalcareerbook.com/buyer to download it for free, and I'll make sure to leave a link below in the description as well. And guys, if you're new to the channel and if you haven't subscribed yet, make sure to hit the subscribe button about new videos I'm putting out every single week. And again, I'm gonna leave another video that's been hand selected for you right here.